So we are 10 minutes away from the US cash equities markets open, and not a lot really has developed, although US yields are lower. Um, so this is essentially um, this is weighing on the dollar a little bit, which is moving around this support area that we mentioned at the start of the week. So this now becomes support. Drawing in this harmonic pattern. So we'll just have to wait and see what goes on here. On the calendar, we've got US manufacturing, 40 minutes time. And we've got Fed speakers later on in the day. And then tonight, the RBA. In terms of the pairs that we're looking at currently, cables lifted, supported overnight a little. UK politics are in vogue in that respect. Excuse me. Sterling helped by tax cut U-turn. So in the European hours, we had that spike up, retracement, testing the resistance that was cited in the prior analysis. I'd like to see a move higher to bring the structure higher up for the move higher for the sell down. So we have European lows, corrective lows here.
Space here with your German 10-year blue yield falling 16.5 basis points, now reaching the lowest since September 23rd, 1.95%. It's set for its biggest daily fall since July 22nd.
So there's going to be money down here, so a short into the money. So we're waiting for the US numbers, and we'll see what comes of that. PMIs. We move over to the yen. Should the move up. So we have a peak formation.
Over a minute now, it's a release of the Canadian manufacturing PMI for September, again a prior rate of 48.7.
Gold. Supported on the fallen yields. And the range being expanded. Possible peak formation in place. Again, we'll have to wait and see what the data
10
is
seconds.
from the US. Came up for the weekly highs.
49.8, 49.8 for the Canadian manufacturing PMI, as a rise from the prior 48.7.
1, 2, 3 attempts at last week's highs.
Looking to that report here from S&P globally, that manufacturing conditions in Canada continue to deteriorate, while output and new orders are falling for a third month running, but rates of decline are easing in September. As well, they note the overall input price inflation slowing to a 22-month low in Canada.
So on the 5-minute chart with gold, looking for a move at this juncture. On the 1-minute chart, same scenario really. Bullish above the trend line, bearish below. We're not doing anything until we've had the US data. It'll be interesting to know if the price can break below the structure.
With 51.8 expected to remain unchanged from the prelim reading.
10 minutes now until the data. Dollar CAD. Dollar CAD has come into the daily support, testing it. Um, um, 136.87 could be a key level. Certainly 136.05. Last week's lows, 135.58. But if the thesis is correct, at the start of the week, then this could have been a peak formation starting to be placed. We're looking for a move higher. Currently not seeing that.
So not to hear from S&P Global, they look to the UK's decision to the reverse tax cuts for the highest earners not going to materially affect fiscal and economic projections published on Friday. So the web outlook of the UK rating was cut to negative.
But there's the move that we were talking about yesterday. Now we're looking for buyers to come in to get us back into the neckline of the harmonic formation, and then we'll see how things go. If you can get back above resistance and move up. So this may be a peak formation being put in place at 137 or below 137 minus a quarter for the move up and for a potential scalp. Yeah, a little bit later today, this morning. Euro dollar, we were bearish until, well, to 97.50. Explained in the pre-open analysis, we've had a low of 97.52 so far. The work was done in Europe. Will we see a follow through in New York for 97 the figure? Yet to be seen. New Zealand dollar has run up, so we're looking for it to run down. So we've got key structure over here, it's 56.50. Peak formation potentially forming here. We've had 1, 2, this would be the third level of rise. Stairs up, escalated down. And we can say the same for the Aussie. That's already starting to shape up. Break of structure. 3 levels of rise. Stairs up, escalated down.
September reads for US manufacturing PMI again 51.8 expected.
3 minutes until the release. Okay, 10 seconds till the data.
$52.0 for the manufacturing PMI out of the US.
52.0.
So looking to the full report here from S&P Global, they note that renewed expansions in output and new orders as cost pressures are softening. So production and new orders are rising, albeit only marginally. Input cost inflation easing further as well, as some inputs falling in price. Employment growth fastest since March.
Right, so we'll just sit tight and let the market do
So
what it wants
closer
to
as well
do.
as comments from their chief economist, they note that with supply chain delays also easing substantially again in September and shipping costs falling, upward pressure on firms' costs have moderated sharply, which will feed through to lower goods prices to consumers.
Right, so that's the end of the analysis. And if there's anything to do, then we'll come back with trading videos for this session. Have a good week ahead, everyone, and see you later.